VCs chase unicorns, so unless you truly stand out, you're likely not in the 0.05%. Are there any demographic or experiential factors that at play that might influence a company's likelihood of securing investment? For instance, does being a first-time founder versus a repeat founder or a Stanford graduate versus a Midwest college graduate statistically impact a VC's decision?
Yeah, so there's clear evidence that these factors can play a significant role, reflecting both perceived risk and sort of network advantages. There's first we have repeat founders, right? So particularly anybody who has done a successful exit in the past, VCs think of them as a successful candidate to invest in because they've seen that whole journey. So data from Harvard Business School suggests that anybody who has a successful venture exit has a higher chance of succeeding in their next venture. Uh, After that are people who've actually had a failed chance before because they're still more aware about it. And the worst sort of chance of success between these three groups are first-time founders. So VCs are aware of that. VCs often see a successful exit as a strong signal of skill and execution. Also, when it comes to sort of university backgrounds, there's not a direct guarantee, but it often sort of correlates with access and network. So a study by PitchBook actually revealed that Stanford University, UC Berkeley, MIT, Harvard collectively accounted for nearly 25% or a quarter of all venture-backed companies, right? Like this is a way more larger share of venture-backed companies than this is a share of sort of university graduates in the US. So there is a network effect at play because these folks are able to get into those right conversations and be able to meet the right folks needed to get funding. And another stat that's also interesting is that Berkeley graduates, so people who graduated from UC Berkeley, have founded more venture-backed companies than undergraduate alumni from any other university in the world. So there is this access component to it, but it's also linked to the fact that these universities are in California, where a lot of this industry is. So you just have a lot more chances of meeting investors and getting in front of VCs. This isn't necessarily about the quality of education alone, but rather about the whole entrepreneurial ecosystems, how your alumni networks come into play, and how early stage capital is often concentrated around these institutions. While an entrepreneur from a Midwest college could very well succeed, they may face a steeper climb in the initial network access component, and it requires somebody like that to have even stronger traction and be able to demonstrate product market fit to overcome these implicit biases. It's crucial to acknowledge, though, that talent is distributed everywhere, and there's great successful companies and founders built outside of these ecosystems all around the US and all around the world. And VCs are increasingly looking beyond these traditional networks. So there is a trend of more and more access increasing outside of this bubble. And even in the past, there's been unicorn companies, which are billion-dollar companies that have been created by founders from, universities all over the US and all over the world.
If you found value in this episode, make sure to just subscribe or follow, leave a comment, or share it with a friend.